Over the past few years, I've heard just about every possible reason explaining why people shouldn't touch XRP. I've seen the same recycled talking points repeated over and over again. It's centralized, it's a scam, Ripple is dumping it for profit, and so on. The pattern never changes. What surprises me most is how often these claims are repeated without anyone taking the time to actually dig deeper. Before we get into this, welcome back to Reverse Crypto. If you appreciate honest analysis without the noise, make sure you hit that like button and subscribe to the channel. It really helps the channel grow and keeps this kind of content coming. Now let's zoom out for a moment. Think about where XRP stood a few years ago compared to today. The landscape has shifted dramatically. Major announcements, regulatory clarity, ecosystem upgrades. Everything surrounding XRP has evolved. The regulatory cloud that once hung over it is no longer the defining narrative. When you compare today's environment to what we saw 2 or 3 years ago, it's not even close. Yet despite that progress, the same surface-level criticisms keep resurfacing. It's almost as if some people stopped paying attention after reading a headline once and never revisited the topic. That kind of thinking ignores how much the space changes year after year. From a market perspective, one of the most important factors right now is sentiment. XRP is currently sitting at levels that historically have coincided with extreme oversold conditions. If you look back to the depths of the 2022 market bottom, especially during the fallout from FTX, you'll see similar signals. Selling into that level back then would have meant exiting right before a significant recovery. In hindsight, very few people would have chosen to sell at those lows if they knew what followed. Yes, waiting through long consolidation periods can be frustrating. Sometimes it takes hundreds of days before a strong move develops. But investing has always been about patience. If the long-term thesis remains intact, time becomes an ally rather than an enemy. Right now, many retail participants feel exhausted. XRP is down roughly 60% from prior highs. Drawdowns of that size are emotionally draining. But historically, markets tend to bottom when fear peaks, not when confidence is high. On-chain data supports this perspective. Recent realized loss spikes have reached levels not seen since 2022. Realized losses occur when investors sell below their purchase price, locking in negative returns. When large waves of capitulation hit, it often signals that weaker hands have exited the market. Once selling pressure exhausts itself, even modest buying demand can push prices upward. This doesn't guarantee an immediate rally. Nothing in markets is guaranteed. But extreme fear often appears near turning points. When everyone expects further downside, probabilities start shifting. That said, caution is still necessary. There remains heavy resistance overhead, particularly in the mid-$1 range. Until those levels are decisively reclaimed, declaring a confirmed bottom would be premature. Optimism must be balanced with discipline. Now, beyond price action, let's address the ongoing centralization debate that keeps resurfacing online. Recently, a well-known commentator claimed that multiple networks, including XRP Ledger, are fundamentally centralized and therefore flawed. He grouped XRP together with several other projects and argued they rely on permissioned systems rather than true decentralization. One of the biggest misunderstandings in this space is the confusion between Ripple the company and XRP the digital asset. They are not the same entity. Conflating the two immediately weakens the argument. Claims about validator control and permissioned authority are frequently exaggerated. XRP Ledger uses a unique node list structure that allows nodes to choose whom they trust. While there are recommended lists, nodes are not forced into a single centralized authority. The idea that one organization can arbitrarily rewrite the ledger ignores how consensus mechanisms operate. David Schwartz responded directly to these criticisms. He pointed out that suggesting XRP Ledger grants absolute control to a single entity is as unrealistic as claiming a mining majority in Bitcoin can magically create new coins out of thin air. Majority control in any network creates theoretical risks. That's not unique to XRP. Interestingly, critics often overlook practical evidence. On Bitcoin and Ethereum, we've seen transaction reordering, temporary censorship concerns, and MEV exploitation. These are real dynamics in decentralized systems. Meanwhile, XRP Ledger has operated without documented cases of double spend attacks or systemic censorship events. Often these debates seem less about technical accuracy and more about engagement. Controversial posts attract clicks, Extreme opinions drive traffic. Whether someone praises XRP with outrageous price predictions or attacks it aggressively, both approaches generate attention. Another recurring misconception involves supply. Some argue that Ripple controls the majority of XRP and can dump freely on the market. In reality, large portions are locked in escrow with scheduled releases. While Ripple historically used XRP sales as part of its revenue model, its business model has diversified significantly over time, especially with stablecoin initiatives and institutional partnerships. Fear narratives tend to intensify when a network shows resilience. XRP remains among the top cryptocurrencies by market capitalization. Despite years of controversy, it continues to rank near the top of the industry. Beyond price, the ecosystem itself keeps expanding. Institutional interest has grown. ETF-related discussions have increased. Ledger upgrades continue. Native lending functionality and smart contract integrations are being developed. DeFi infrastructure tied to the XRP Ledger is evolving. Real-world asset tokenization and stablecoin volume are rising steadily. It becomes difficult to argue that nothing has changed when the data shows continuous development. So why does negativity persist? In many cases, critics fall into predictable categories. Some hold no exposure and feel frustrated watching from the sidelines. Others fear that XRP's growth could challenge their preferred asset. Some simply misunderstand the technology. And occasionally, individuals who bought near prior highs project their disappointment outward. Markets amplify emotion. During downturns, negative narratives dominate timelines. During rallies, optimism floods social feeds. The underlying fundamentals, however, move independently of daily sentiment swings. At the end of the day, investing is about conviction built on research, not noise driven by social media cycles. XRP's journey over the past few years demonstrates resilience, adaptation, and expansion. Whether price action confirms a bottom tomorrow or months from now remains uncertain. What's clear is that extreme pessimism has historically preceded opportunity more often than not. If you found value in this breakdown, make sure you like the video, subscribe to Reverse Crypto, and turn on notifications so you don't miss future updates. Thanks for being here, and I'll see you in the next one.